Hey there, traders. It's Thursday, November 18th, 2021, and kind of like yesterday's trade, which was not a very popular video, I gotta say. Yikes, 3 views. Like yesterday's video, we're looking at a post-earnings trade where we've seen some big movement right around earnings, and we want to be contrarians. At least that's what Tasty Trade wants us to be, and I don't know about you, that just feels right. You know, hey, this is on sale, or hey, this is crazy expensive right now. There seems to be those, reversion to the means, and I think they have the data to prove it. So if you're willing to put this to the test in a simulated trading account, or if you want to do it with your real dollars, you can certainly go ahead. We're going to go ahead and put a trade on in Disney today. It's an IV rank of 13. I'm going over my thumbnail preview here, and it got a liquidity rank of 4 out of 4. However, today's cherry bomb trade from Tasty Trade has us in the weeklies, which will negatively impact our liquidity. So I'd encourage you to explore the monthly options for improved liquidity. So let's get started. Hi everybody, my name is Neil and this is Option Theory. Thank you so much for joining us here. We do these videos Tuesday through Friday, sometimes on Mondays, but we get our trade ideas from Tasty Trade. You can get them from Tasty Trade too. Head down to that description below. Go on over and sign up with Tasty Trade, not with me. You're not paying me anything. They aren't paying me anything. This is me just doing it because I have fun doing this. Hopefully you'll fall in love with trading options and you'll join me by hitting that subscribe button. So let's get trading, shall we? All right. So anyway, we got on screen here. We see we're in Thinkorswim simulated trading. I've done a whole series on getting started with Thinkorswim, so check for that on my channel playlists if you're new. We can see here we had earnings and a big drop after that here in Disney. And it's been kind of trending down. It's been trending down after that as well. So, is that all the week longs getting out? Oops, okay, maybe. But anyway, we're going to say, hey, Disney's on sale now, right? Its low for the 52 weeks was 140. Sure, it could go back down there again. Maybe it will. We're not quite sure. But what we're looking at doing is taking a risk one to make one kind of trade because the IV is low. It doesn't make sense to sell premium in this case. Let's go to the Analyze tab, go to Add Simulated Trade. The Cherry Bomb trade has us in the December 31st weeklies, which expires in 43 days as of today, the 18th of November. And as always, if you're following the Tasty Trade mechanics, you go to the At the Money and you come and you buy the call that's in the money, or the put, if you're doing a put vertical, right? And then you sell the one that's just out of the money. And there you have your Cherry Bomb long call vertical. We've got that built here. I'm not a big fan of the lower liquidity numbers and 20-cent wide bid-ask spreads. But we've definitely traded lower numbers and gotten filled on the open interest. So we're going to analyze this trade as it was sent to us. Let's go to the risk profile. Let's set the date in the top right corner to the same date that you see here in the bottom left corner. And we got our price slice set so that it goes right where that blue line crosses the 0. So we know at expiration, we're looking at a 49% probability of profit. So that's not amazing, but if we switch over to Tastyworks, and I believe I have the same trade pulled up here, what we're looking at here is a P50 of 61%, a 61% chance of us making half the credit. So let's call it $130 somewhere in the next 43 days. That might be good. That might be not good. It's all up to you. But the good news is you can try it. And the good thing is also if you're using Thinkorswim's simulated trading, you have two different accounts. You have your margin and you have your IRA. And it's simulated money, so you're not hurting anybody. See, I'm a little messed up right there. Let's set the slices to break even, and at expiration, there we go. It looks like probabilities have even worsened. It's 48 here, which matches, I believe, what we see. 49, 48, there it is. Okay, so you could put this trade on, which I'm going to do. I'm going to confirm and send, and I'm going to show you that screen. Hang on. I'm hitting the right thing. There it is. There's the right screen. We're looking at a max loss of $243, a max profit of $257, a P50 of 60. Give me a second. What did I say it was? Not letting me do it. There we go. 61% probability of us collecting that profit. Okay. Or I should say half of that profit. I'm going to go ahead and hit send and put that in my working orders. Go back to this and let's switch over to the IRA account and quickly explore an alternative. You could go for the December monthlies or you could go for the January monthlies. I find myself more interested if I'm paying for a trade to want to buy time. So I'll go ahead and look at this one. Same strikes, 155, 160. Let's analyze this. The expirations difference, 122. And wow, look at that. The break even's pretty much the same. We're looking at a 47.5%, only slightly lower percent probability of profit on this one. But it has more time to, I guess, either go against you or go in the direction you'd like. So, do you want to buy the time, right? Or do you want to, see if it works out for you in a shorter term? I wonder what you think on this one. For ha-has, I'm going to go ahead and right-click this one, choose confirm and send. And see here, our max loss is 248, max profit 252. But now we have 60 some odd days to see if this works out for us. I'm going to go ahead and put that in my working orders. You didn't see that, but I just talked you through it. So now I have 2 trades. We can compare the performance of the 2 to see if buying the time was worth it or maybe even detrimental. Thank you so much for making it to the end of the video. You know how to subscribe. You know how to go ahead and get yourself those cherry bomb emails. I hope you'll come back and watch more of our videos. And until the next time, may the market be with you.